Good morning and welcome to the launch of FSMOne US and Hong Kong trading platform. Now, in the room together with me, Mr. Wong Wei Yi, General Manager of FSMOne Malaysia, management team of FSMOne Malaysia and iFast Capital, members of the media, distinguished guests, our online audiences on both platforms, ladies and gentlemen. Welcome to today's event. And today's event marks a significant achievement for FSMOne Malaysia. In the history of 13 years of its establishment, FSMOne Malaysia has carved a new milestone. Launching today, a newly developed trading platform for the investing public allows you to trade US and Hong Kong stocks and securities. FSMOne's new milestone today is made possible with firm support from iFast Capital, the main licensor of FSMOne. And ladies and gentlemen, iFast Capital is licensed by the Malaysian Securities Commission. Now, personally, I believe that the new platform is launched at the right moment of time because as Malaysians, we scour the internet looking for a secondary source of income. And here you have it today. You may register online now at FSMOne's website and stand a chance to win a 100 ringgit worth of unit trust for the first 1,000 investors who trades in our US and Hong Kong stocks and ETF on FSMOne's platform. Ladies and gentlemen, without further ado, I would like to invite Mr. Wong Wei Yi, the General Manager of FSMOne Malaysia, to deliver his opening remarks and launch the new platform.
Hello, hi. Good morning, everyone, and thank you for tuning in to this press conference. My name is Wei Yi, and I look after the FSMOne platform in Malaysia. Today, I'm excited to announce that we are finally offering the US and Hong Kong stocks trading services. I'd like to share with you what kind of pain points we are trying to solve for Malaysian investors when it comes to the trading of the foreign shares. But before that, I would just like to introduce FSMOne platform in case this is the first time that some of our media friends have heard about us. First, I would like to begin with our mission statement, which is to help investors invest globally and profitably. And we aim to do this by providing simple and well-regulated products, low charges to the investors, and I believe most importantly, plenty of research content for investors to educate themselves and make informed decisions. So with that, please allow me to go into some of our history. FSMOne was previously known as fundsupermart.com. We have started off as an online platform for investors to invest in unit trusts back in the year 2008. And over the years, we have added funds from different fund houses, and now we are offering more than 600 funds from about 30 fund houses. We have also been offering a lot of research content like macroeconomic outlook as well as recommended funds on our platform. And in 2017, we have launched our managed portfolios, which is a discretionary portfolio management service. This is to help investors who prefer a hassle-free way of managing their monies. So instead of having them need to choose different funds out of 600 funds, they just have to choose a portfolio which is suitable to their risk tolerance. And FSMOne's portfolio management team will manage the portfolio for the clients. So it's a bit like the robo-advisory products, which is very popular right now, but our service is run by a human rather than algorithms. And forward to 2019, we have launched over-the-counter bonds for investors. So investors can invest directly into bonds, both corporate as well as government issuance, on our platform from as low as 1,000 ringgit. Most of the bonds are very straightforward, so it's suitable for investors who want a regular cash flow, and they can get it from the semi-annual coupon payout. And finally, this year, we have launched our stocks trading services. So the platform is very comprehensive right now. You can have buy unit trust from us. You can invest into managed portfolios. You can have some OTC bonds and now stocks. In March, we have rolled out our Bursa stocks trading. We are encouraged by the uptake of the Bursa stock trading services. However, what we hear from our client is actually the request for foreign shares trading, because there are a number of pain points when it comes to trading foreign shares for Malaysian locally. So we are pleased to roll out our service targeting to solve some of these pain points. Number one pain point that we hear would be the high fees imposed by local brokers when it comes to trading foreign shares. Many brokers in Malaysia do charge a premium for offering foreign shares trading, and the brokerage fee ranges from 0.2% all the way to 0.8%. So in comparison, our brokerage fee is only 0.08%, which is a lot more affordable to many clients out there. And in this point, it is very straightforward. The less brokerage fee you pay, the more profitable your trade would likely be. The second pain point is the fee associated with foreign exchange rate. So FX on local brokers could come with a rather high markup. And in fact, some investors simply may not know what is the rate that they are being charged because they settle the trades in ringgit. On our platform, investors would have to settle their trades in the respective currencies. So one can shop around for the best rate, then you TT the monies into our cash account. Or alternatively, they can also check out the FX rate offered on our platform, and which is offered by our agent bank, which I believe is much better than over-counter rate for many retail investors. So the rate you will be able to get, the FX rate that you get on the FSMOne platform is transparent and it is very competitive. Investors can definitely look forward to saving on brokerage fees, as well as have a certainty in the FX when they deal through FSMOne. So aside from savings, I think FSMOne would stand out and be unique from the point, or especially for investors who are looking to invest in ETFs, because we would be able to produce very interesting research content on ETFs, which is less covered compared to the stocks. And the reason is because we have been researching on funds, unit trusts for a long time. And for most of the fund managers, their benchmark is typically market indices. And this is what the ETFs would typically seek to replicate in performance. So looking at the Malaysian unit trust space, we are looking forward to areas where we could suggest ETFs as an alternative to actively managed funds, so that investors can invest more profitably. Of course, some more savvy investors would have tried to use international brokers, foreign brokers, because if we do a comparison of the rates, they are a lot more competitive. However, I believe for most retail clients, it may not be worthwhile because the account opening process may be a bit more complicated. And after that, investors would have to figure out how to transfer the monies to the brokers and to receive the foreign currencies back into Malaysia. And most importantly, if there is a dispute with these international brokers, and because they are not licensed in Malaysia, it will be hard for Malaysian investors to work out a resolution. So putting fees aside, working with a locally licensed broker would definitely be safer for Malaysian investors. So here we are. We have rolled out the foreign shares trading at affordable price. And because you're dealing with a locally licensed broker, you can enjoy the peace of mind when you're dealing through us. So what I have prepared to say is actually meant to end here, but I would just like to add a bit more because of the recent market developments in the financial markets, and why I think now this rolling out this foreign shares trading at this point of time is an apt timing. So number one, I believe it is good for Malaysian investors to hold overseas investment, especially at this point of time. Most Malaysian investors would have a portfolio which is locally biased, a lot more local bonds, a lot more local equities exposure. However, if we look at how the COVID crisis is transpiring globally, it seems clear that the developed nations would emerge out of the crisis faster. In fact, in the US, they do not have the kind of movement restrictions that we are currently going through. So the pace of economic recovery for these developed nations will definitely be faster, and they have more flexibility for further fiscal stimulus if there is a need to push economic growth. With a faster pace of recovery, their interest rates would normalize much faster, meaning that the chances of FX appreciation of the developed nations relative to ringgit will be quite high. investors with FX exposure to foreign FX exposure would benefit in this case. In fact, in my own personal portfolio, I have already started to include a lot more US dollar exposure. And another reason why it is an apt timing is I'm sure most of you know what has happened to the Chinese equities recently. So the Chinese government has started to clamp down on Chinese tech giants. And Chinese tech has fallen more than 20% in the past month alone, with the sharpest fall taking place over the past week. And if we compare the prices now with the peak that they have achieved in February earlier this year, the decline was more than 50%. And some of the prices of these Chinese tech ETFs are back to the pre-COVID period. So over the past 1.5 years, returns have been wiped out in this year. So in such time of crisis, I always try to look out for opportunity. And investors who are interested can read up more about our view on the sector on FSMOne. But I would like to point out is that short corrections in China is not something new. And it has happened before in 2015, where investors were worried about structural change in the Chinese economy, leading to concerns of recession. Or at a point of time, we hear about the term hard landing. In 2018 to 2019, investors were worried about the China and US trade war. And of course, in year 2020, COVID crisis took place globally, and China was the first country to go into a lockdown. So all these crises, we have seen China go through sharp corrections. But despite all these corrections and crises, Chinese companies as a whole have stayed very resilient, and their earnings continue to grow year by year. So if you have the risk appetite and time horizon, if you believe that China is on its way to become the world's largest economy in a decade's time, this recent sell-off would definitely be a great time to pick up some Chinese ETFs on a bargain. And on FSMOne, you can start shopping for these Chinese ETFs right away today. So thank you, and this is what I have to say. I'll hand over the time back to Fabian.